Hello traders, it's Samurai Trader here. Welcome to this training session. In today's session we're going to be looking at day trading the NQ futures contract, tick charts versus range charts. We now have hundreds of members around the world that trade the NQ using tick charts, and quite often I'll receive emails just about how whippy the tick chart can be, particularly in times of extreme volatility as we've witnessed in the last week. So in today's session we're going to be looking at range charts and how we can smooth price action and actually make entries easier to recognize. Of course, as with all of my recordings, we need to understand the risk when it comes to trading. If you're not familiar with my videos, or if you haven't read this risk disclaimer for a period of time, please do. We also are about to go, after I go through a couple more slides, go to some charts, and I'll give you some chart examples. So bottom right hand corner, you can click on that and go to full screen. It may make it a little easier to view the charts. So as we get into this, let's consider this for a moment. Those that may be watching this recording that are not familiar with the NASDAQ, the E-mini, the symbol of course is NQ. It trades in 0.25% increments, or $5 a tick. It's $20 a point. Now it's a great market to trade. You've got very good volume, and I like to trade the 133 tick chart for day trading the NQ during the New York hours. During the after hour session, the Globex session, you really need to drop that time frame right down because you just don't have anywhere near the volume. And in fact, usually during the Globex session, the YM exceeds the NQ as far as volume goes, which is another excellent market to trade. So considering the NQ, how can we smooth price action? Because it can be very whippy, very rangy at times. You can have the candles or price bars really very different sizes, etc. Well, one of the solutions may be for you to consider range charts. I really like range charts because they can really smooth price action. Now with range charts, as with tick charts and any time frame, if you like using time frames, you need to consider stops and the speed of a market. Of course, the lower the time period, for an example, one range, each candle will form a lot quicker than say a two range. So also at times one range is just not tradable, in my opinion. That is, the market, each candle is forming so quickly, it makes it very difficult to enter the market and also identify trade setups. So I really like the 1.5 range, or the 6. So 1.5 range, as a reminder, is 6 ticks. Okay, so each candle is worth $30, and we'll have a look at this because we need to consider the size of candles also compared to your stops. And the reason being, as all of my traders are aware, I like to put my stop 2 ticks above or below the closest swing high or swing low, and we'll look at that in a moment. So typically, if we were to look at say a 1.5 range, two candles might be, I might require two candles to give me my entry. Then my stop will be 2 ticks below there. That's $70, and maybe even 1 tick higher for my entry to be stopped into a trade. So it might be a $75 stop. So that's why you need to really consider the size of those candles. If you are using a flexible stop like that, you may decide to have a fixed stop, by the way, where it really doesn't matter. That is, you might say have a minimum stop on the, or a maximum stop I should say, of say 8 ticks or 10 ticks. And by the way, I would usually recommend a minimum stop if you're day trading on the NQ of at least 10 ticks. I just tend to find that works really well. Now if we consider tick charts, they're very popular. Of course, we have thousands of day traders around the world. Here in this particular case, I've got on the chart there 144 tick chart as an example. I like, as I mentioned earlier, on the NQ for 133. So one candle or a bar will print after every 144 transactions. That is, trades that take place irrespective of how many contracts may be traded within that 144 transactions. Now Another type of candle I really like, particularly on the ES, most of my traders are aware, I really like volume charts. So each new bar or candle will form after 1,000 contracts have been traded. Now if we consider range bars or candles, which is what we're talking about today, that is a new candle will plot once price action has exceeded a user's predefined price or tick range. An example might be a tick range in this particular case on the NQ, which we're about to have a look at. Now volume charts rely only on volume, range bar charts rely only on price action, and that is why if you're a price action trader you may really like trading with range charts. Now all of this of course and a whole lot more is all covered in the Day Traders Fast Track program. So the setups I'm about to talk to you about, particularly for my members, are all included in the Day Traders Fast Track program. So please go to my website after the recording and request more information on my course and also my free ebook. And of course please make sure you subscribe to my channel. So let's now go and have a look at the charts themselves. Now what I have here, traders, in front of you is on the left a 133 tick chart on the NQ, and on the right we have a 2-range chart. So what we've got here, and we can just see this light black line here, and let me just go back one candle. You can see this white paint bar just there, the candle right next door is this action right here. So if you then start to take notice of the fall in the market, this area here, just look how congested that is. And then on the right, just notice as I scroll across over here, notice how smooth that is there compared to this, which is very whippy. So as with always, traders, I recommend that you always go back and do your own testing. When you're looking at any trading model, any recommendation, go and have a look at this yourself. But as we go along, I think you'll find there's real merits in trading a smoother chart with the NQ. Something else you'll also notice, perhaps it's not a great example here, but you'll quite often notice here that if you've got a very short-term MACD, for an example, the action on it usually is a lot smoother when you're using a range bar chart because price action has been smoothed out there as well. So let me just expand this chart here. Now what we can see here is it almost looks very messy, doesn't it? And the time factor here over on the left here, this is 11:24 in the morning, and over here this is US time, this is 1:23. So we can just see that time range there, but it's also very whippy. Now for my members, we can see up here we had of course our classic T20. We've got a T3 there, we've got a nice T3 up here, we've got a T3 bottomed out for a nice T7, a double bottom. And this is a classic example, by the way, traders, where I always like to have my entry, or sorry, my stop 2 ticks below the closest swing low or high. So my stop would be 2 ticks below there. You're actually kept in that trade, that tick down 1 tick lower than here, so you're kept safe in the trade if you were long there. And my stop would be 2 ticks above there if I'd have shorted here. Likewise, if I'd have gone long here, my stop would have been 2 ticks there. For our T20 up here, my stop would have been 2 ticks above there. So we can just see how price action is really, it's very messy, and this can be very frustrating for traders. And if you look at the large candles, it can mean if you are going to place your stop above or below these pivot points, these swing highs or swing lows, you can have quite a variance in the stop if you do want to do that, unless you're using a fixed stop concept. Now if we now go over and have a look at a comparison to a range chart, and what I will do, traders, just make sure that we're looking at exactly the same area. So let me now go and have a look at this here. Let's expand this out. So we can just see here where the NQ is very whippy. Now as much as we go into a period of consolidation here, but you can just see it's very smooth price action. Here you've got a T20, you've got a T20. This is of course, as with all trading, when we see our moving averages going sideways here horizontal, even though they're slightly rising. As you can see there, you can see we still an uptrend, and of course our longer term, our 200, is telling us that really we should be considering long trades only. So you've got an entry here, you've got another entry there, you've got one here, you've got one here, you've got one there. But just notice, in comparison to the NQ here, it's just a very, very different looking chart. Now time wise here, so we're looking at what are we here, 101 here to let's just do here, okay, and just look at that there, that price action there. Whoops, and this is this is a difference when you got different types of charts. Of course it can vary the time period that you're trading, or how much you get on the chart, the amount of candles. So if we go to the same area here, let me just get this right for you here. Okay, so there is right there now. So we can see this nice little double bottom, which is very, very tidy. It's what we call a T7. It's very messy in comparison when you look at that area here compared to this area. Now let's go and drop the time frame, and let's go and have a look at a one range. Now one range, as a reminder, is 4 ticks or 1 point. So we just put one in there. We're looking 2 weeks back. Let me just get that up here. Now one of the things you can also do is to do what I've got here, is have your tick and a range chart on the same window, or like myself, if I have multiple screens, you can have them on different screens. But let's just go to this exact same price action over here. So this is, each one of these is worth $20, of course. And so if we look at this right here, so we can see that point there is this point here. Okay, so the one range, and let me just go here, we actually have our traders will know we've actually got an 89B right here, and you can see here you're going to be in a lot earlier. Now if you're after a 10 tick target, I liked, by the way, to go for 12 to 14 ticks on the NQ. There you've got 4, 8, 10, you've got about 11 ticks there. You still would have wanted to stay in. That would have given you about 12 ticks from there to there in this move. Now if you're a true scalper, you can see here with these trades here, you've got a nice scalp there, a nice scalp there, a nice scalp there. Let's just expand this out. You've got a T20. This is that danger zone, as always, traders, you want to be more cautious of. Of course, the NQ, though, usually when you get some trends, you get some really nice trends. So you've got T20, you've got a 34B, of course, you've got there a T20 again, 34B. So there's some great trades there. The problem is the time in trading these. So if we look at this here right now, this isn't, well, this is what do we got, 146 to 236. This is about an hour's price action in that time frame. So let's just go and have a look at one more here. If we go back, let's have a look at the 1.5, which is a 1.5 range, which means that each candle is worth $30. So as far as annual stops go, if we look then here, and this is let's just have a look here, and this is really interesting, traders. If you look at this price action right here now, you can see the 133. Look at the size of these candles. And what I am going to do, I'm going to change the time frame, because this is the end of a trading day, so I don't like to trade the last hour. You can be all over the place. So let's just go back to another time period, which is just going to make it more realistic in trading. Let's just go back here and let's look at this here. Okay, so over here, of course, we've got our $30 candles, if we can call them $30 for a moment, and you can just see how much smoother you are on a range chart. And also notice here that if you're particularly trading with a short-term MACD, it's how much smoother it is in comparison. It's because of the candle formations, of course. So with the strategies of the Day Traders Fast Track program, of course, having candles like this, this is a nice T3. Here's your entry right there. Okay, so let me just mark this up here and have a look at on the range charts. Okay, you can just see how much messier from there, okay, there to here, in comparison to a tick chart. So traders, go back and do some testing, and by the way, then you'll stop if you're entering this one, because your entry isn't clearly signaled here on this T3 to we close up above here right there. Your stop there is probably going to be around the $65–70 mark if you take my recommendation of 2 ticks below a swing high, swing low. There of course you have another nice little T1 entry. So traders, hopefully this was beneficial. So I really believe that range charts have some real merits in trading the NQ. Once again, please subscribe to my channel. Drop me an email if you've got any questions. To find out more about the Day Traders Fast Track program, please go to my website. Even better still, invest $197 and purchase the most comprehensive Day Traders program that I know of. Thank you, traders.